We are teasing what this secondary share sale is, but I don't think anyone needs to guess what company we're talking about. That's Aramco. There was a story circulated last week that Aramco was considering another share sale as soon as June. So what do we know, and how did the stock react?
Well, the stock and the market in general took a little bit of a dip following the news of a potential $10 billion secondary share offering in the market, because that will require a lot of liquidity from investors into this new offering to support it, Joumanna. So we saw a little bit of a dip on that side. But yesterday, what was interesting is EFG Hermes, like you said, expects $1 billion of inflows at least if a $10 billion share offering proceeds, and that would increase Aramco's free float by 0.5%. Where does this money come from? It's passive investors tracking the MSCI and the FTSE indexes. And this money won't be redistributed from the Middle Eastern names on those indexes, but rather across all names on those benchmarks. So there won't be much of an outflow from other Middle Eastern names.
What is the current free float?
The current free float is just over 5% with the PIF stake.
Yeah. So let's take a broader look back at the Tadawul index, because it's interesting to see that it's actually lagging many of these MSCI indices this year. What do you put that down to? Is it just the oil effect?
Well, that's one part of it. And then you have the geopolitical risk that's happening in the region at the moment. Then the other part is there have been reports, and Bloomberg has reported that NEOM, which is currently a major project in the government that has boosted a lot of sectors over the past several years, that's being scaled back. So with that, you've seen a little bit of an impact across different names on the sector as well. And again, the IPOs, Aramco's secondary share offering, investors are keeping liquidity on the sidelines so they can reinvest that money into those new listings.
So another equity story on my radar, Abu Dhabi's largest company, IHC, have announced that they're considering of going ahead with a $1.4 billion buyback. What is the rationale for that?
Well, we have an international holding company considering that $5 billion dirham buyback, $1.5 billion. That is to sort of revive the stock once again, Joumanna. IHC, if you look at the chart over the past 5 years or so on the terminal, it sort of jumped 43,000% and then kind of tapered off.
Right.
So they're looking to see whether that could boost the share price. And at the same time, they say that they see significant value in IHC's future. So they want to reinvest a lot of their cash into their own company.
How much of that is their desire to give some money back to Emirati nationals? I was reading the statistics saying that 90% of the stock is owned by Emirati nationals to begin with.
That's correct. So a large part of this company, like you said, 90% is owned by Emiratis. It is chaired by the UAE National Security Advisor, Sheikh Tahnoon bin Zayed Al Nahyan. So they are saying that this is a reward to shareholders that might have not seen the stock price jump over the past 2 years or so.